David, we start kind of positive week after the last week's sell-offs. So what was driving that, and what's the overview of the week in your perspective? And in terms of next week's important data, what we can expect and how we can, as a trader, anticipate and build a trading strategy ahead of these kind of earnings.
Yeah, well, good luck with that. There is no trading strategy going into these numbers. I can tell you that right now. Excuse me one sec. We are always not proactive, we are reactive, especially as a trader. And what I mean by that is I'm not going to try to anticipate what the Fed's going to say or what they're going to do as far as interest rates are concerned. I will have my technicals up, I will have my chart ups, and we will trade off that. As far as what's going on the last week or so, it's been really crazy and volatile. I mean, last week we had some important numbers coming out, economic numbers coming out. We had the CPI and we had the PPI. I don't want to get crazy and get into what each of them means, but I can tell you that anything that has an I after it is very important and can move the markets, okay? So if you see something with an I, be careful. That's when things can really get crazy. And next Wednesday is the Fed meeting. So at 2 o'clock, they will announce what they're doing with interest rates. And then at 2:30, Powell will come on and bore everybody for an hour talking about whatever the heck he wants to talk about. So it is widely anticipated that there will be a 25 basis point cut. Some people are calling for a 50 basis point cut. My personal opinion is it's going to be 25. I think if they do 50, it might send a little panic through the markets that they're behind the curve and they want to catch up on some things. So I think slow and steady. If they do 25, that's what everyone's expecting. I don't think that'll rattle the markets too much. Last week, because of those economic numbers that we had, let me get my
I'm just removing the disclaimer, and I want to remind everyone the reason of these sessions are educational. The purpose of these sessions are educational. There is no financial advice given. Cool.
Exactly right. Yeah, you never tell anyone when to buy and sell stocks. I'm not a financial analyst. No. I only give you my opinions. So here's a chart of the spiders from last week. Okay. So this was last Monday. We had the CPI come out on Tuesday. Whether it was good or not, it doesn't matter. All that matters is what the stock does and how the market reacts. And then we had the PPI come out on Friday. So we really went down almost 3 or 4% based on those numbers. People started getting worried. It's always an overreaction. And this is this week, Monday, Tuesday, Wednesday, Thursday, Friday. And as it stands right now, we are less than 1% from all-time highs, which I always tell you guys all the time. There's no such thing as a market crash, okay? When the markets go down, that's when you get your shopping list ready and the stocks that you like, the good long-term stocks. There's no such thing as a crash. All the market does is go up over time. It has for 150 years. So especially for you younger people out there, I'm in a little different situation. But for you younger people out there, when we have these big drawdowns in the market, that's the time to start adding to your wish list and the good stocks. So for the last 5 days now, we've done nothing but go up in the SPY. Probably be quiet until next Wednesday. I can tell you that we'll go back to our 5-minute chart now. Let me go here. On Fridays, usually, and this is what I do anyway, we've had a very good trading week this week. So on Fridays, we always cut our size if we trade at all. If you've done okay during the week, you kind of want to go into the weekend on a high note and not give any money back that we've made during the week. We've had a lot of volatility today. I can tell you that. We've had these big spikes up and big spikes down. And you'll see that sometimes on Fridays because there's just not a lot of volume in the market and there's just not a lot of people here. So as a trader, I'm always just more conservative on Fridays, just as a general rule, because that's when we can see things move around on not a lot of volume. I think we're at right now in every stock or anything that we look at, we're about 1/2 of the normal volume that we usually see during the week. So Fridays are always, for me, a take it easy day to just relax and not be in a hurry to do anything.
Gotcha. And in terms of our topic, the entry and exit strategies. So how can we use advanced multi-time frame analysis to align our psychological discipline?
Yeah, this is a great question. And it all comes down to technicals. I talk about this every week, but everything I do is based on technical analysis. I try not to think, because thinking gets you in trouble when you're trading. And I definitely try not to hope, because if you're in something and you're hoping that something happens, you shouldn't be there, right? And we've all been in that situation where we get into something, we buy it, and it goes down, and it goes down, and it goes down. And then we put our little hands together and we say, God, please just let me get out of this trade. Let it go back up. I promise I'll never do that again.
Happened yesterday.
So hope is not a strategy in any kind of trading, that we're looking at also. So as far as having entry and exit strategies, and we'll look at some longer term time frames. Yeah. Okay. So we recently had a situation in Google. All right. And we'll go to the 1-day chart in our Google. Okay. So we had a little situation in Google, and these are the kind of things that I look for as far as entries and exits on longer time frames, and how to manage that once you get into the trade. So one of the things I look for, one of my technical things that I look for, is when a stock, especially a big company like Google, Nvidia, Apple, Tesla, goes down for 3 days in a row, and goes down significantly for 3 days in a row. So remember, we're on a little longer term time frame. We're on our daily chart now. Okay. And on a daily chart, you guys know I always talk about relative strength. And when something gets oversold or overbought, when the relative strength gets between 30 and 20, something is said to be oversold and we can expect a bounce. And when it gets up between 70 and 80, something is said to be overbought and we can expect a pullback. One thing, and we don't really talk about this a lot, and for the people who are here, you guys tell me, you should be buying stocks if you're trading and shorting stocks if you're trading. And a lot of people are afraid to short stocks, or don't know how to do it, or don't even know what it means. So if anyone's confused about that, pop it in here and we can talk about how you short a stock as opposed to how you buy a stock. If you're a trader and you're only buying stocks, you're missing half of your trading opportunities, because technically things set up to be short as well as they do to be long all day long. So don't be afraid of shorting stocks. The big reason why some people are afraid to short stocks is because they think their loss is unlimited. It's not, okay? Especially if we're doing a trade, we're going to have what we call a stop order in every trade that we do. So if we short something and it starts going higher, we can just get out of it with a stop order. It's the same. It's just a different side of the same coin. So don't be afraid to short stocks, especially as a trader. Okay, so we were looking at Google, and we went down from all the way up here. If we take it 190, and then we had our 3 days down in a row and we hit a 148 level. So technically that was a spot for us to start buying the stock. And again, we don't give financial advice. But what I'm looking for is 3 days down in a row. And look how low, if you look down here, our relative strength got to about 25. So that's telling me that it's oversold. Okay. So we started a little position down here right around the $148. Great. I'm in the stock. It's $148. Now what do I do? Because finding the spots to get into stocks, okay, can sometimes be the easiest part. What we do once we get into stocks is the most important thing, okay? It's knowing what your risk is and knowing how much profit to take out of the stock, right? So when we have a stock that very quickly went from 170 to 150, that is a 20-point move. And it happened in about a week, okay? So when I'm looking at this 20-point move, I can expect, and this is in most stocks and indexes and everything else, it's called retracement. How much of that 20-point move from when it hit the low can I expect it to retrace that down move? And normally in any stock index, we can expect between a 30 and a 50% retracement of that down move, okay? So this is how I figure out what my profit target is on the way up. So if this was a 20-point down move, 30% of that is $6 and 50% of that is $10. So I can expect, based on my technical analysis, to have between a $5 and $10 bounce off this level that we just were. So this was 147, guys. And in the last 3 days, today we traded at 157. That is exactly a 50% retracement of that down move. So my targets when I get into this, I use my retracement. 30% for my first exit and 50% for my second exit. So this trade played out. We're done with it now. We got $5 on the first part of the trade and $10 on the second part of the trade based on that retracement. So you can use that It's really called Fibonacci's also.
I think so, yeah.
Yes. Fibonacci's measure retracement levels. That's exactly what a Fibonacci does. If you're not familiar with Fibonacci's, and we use them a lot, it's one of my favorite technical indicators, quite frankly, because it also shows when stocks are overbought or oversold. But more importantly, it tells you what we just talked about and what you can expect for retracement-wise using Fibonacci's. There are great things out there. If you just Google Fibonacci's, you could find books and all sorts of things. The important thing with Fibonacci's is you have to know where to measure them from. All right. If you're not measuring them from the right spot, it's not going to be accurate and it's not going to work for you. So it's something you should take a bunch of time trying to figure out. Go ahead, Doc.
I was going to ask how long you're going back in terms of determining these rotation zones, like which higher high and which lower low you're picking up for the return.
Yeah, that is a great question. I am not going to go all the way from up here from 190 where we were down 50 points, right? And then expect a 15 to 25 point retracement. No, that's not going to happen. So I want to take it from the last, and the faster it goes down like this, the better, okay? But I'm going to look on a daily chart. Always on a daily chart to see if something gets really overextended, or a weekly or a monthly chart if it keeps going down, right? So a daily chart, and I want to go for the last couple of weeks, a recent move. I'm not going to go back 2 years where it was trading at 300 and go to 150 and expect a 100-point bounce back, right? So let's keep it within a couple of weeks and we get this strong down move, okay? Within the shorter the period of time, the better if we can get the big down moves in this, okay? But I keep it within a couple of weeks, no longer than that. I want it to happen within a couple of weeks and get this big spike down. And we can expect, the reason we can expect this in some of these stocks, Google, I'm very confident that Google's not going out of business, right? I'm extremely comfortable in that. I'm extremely comfortable, with NVIDIA. And you can see this has happened to NVIDIA a couple of times, right? We had these big drawdowns in NVIDIA. We were down 3 days. We just had it recently. So check this one out. Same thing, right? Short term, we went from 130 to 100. That's down 30 points. That's 30%. It's NVIDIA, right? They're not going anywhere. But here we had our 1, 2, 3, 4 days down, and we got to about 100. Same thing. So let's say we got in at 100, okay? Same kind of scenario. We went down 30 points. So I can expect anywhere from a 10-point to a 15-point bounce. That's 30 to 50%. And we've gone from 100 to 120. So again, here's your 10 points and here's your 15 points in that trade also. So it's one of the patterns I look for. It's also a way to know how to get out of these longer term trades when you get into them.
Can you call this pattern as a double bottom?
No, not necessarily. I mean, if we were looking at a daily chart in NVIDIA, okay, so let's talk about that for a minute because I like that pattern also. Right, all the way back here, we made a high of 140. Okay, no matter how long this takes, if at some point we go back and test that 140 level, that would be what we call a double top, and I would be looking to short the stock for a trade. So yeah, that's another pattern that I like a lot. We were talking about going down 30% and then going up 40%. The reason why double tops work is because number one, it's one of the easiest patterns to recognize, especially on a daily chart, right? Number two, it's one of the first trades that a lot of traders are taught because it's not that complicated. What I would be looking to do is we got to 140. If it gets back to 140, I would short the stock with a limit order, have my stop order in above, and take profits as it goes back down from here. Same thing with a double bottom. We made a low here of $90. This would have been beautiful. We could have got down to that $90 level again. That would be a double bottom, okay? And I would buy it expecting a bounce up from there. How do you know it won't go down to take the low below it? That's a good question, Joe. We don't know, but I'm going to use my technical analysis and have a stop order on every single trade that I do. The bottom line is, Joan, I don't know what's going to happen on any trade that I do. Nobody does, okay? Nobody does. What I know is my technical analysis through journaling, literally, and everybody should be doing that, thousands of trades, shows me that I make money on more trades than I lose, okay? So I'm pretty confident that any trade I get in, that it's going to work. Does it mean it's going to? Of course not. Anyone who tells you they don't have losing trades is just plain out lying to you, okay? As a matter of fact, I don't even get upset when I have a losing trade if I played the technicals correctly. It's the same thing. When I get into a trade, if I'm wrong, I'm going to lose a little money. And if I'm right, I'm going to make more money than I was willing to lose. And that's why if you have a hit rate, which everybody should know, okay, if you have a hit rate of 60 or 70% and you're making on more trades than you lose, then you have to manage the trades properly and you should be profitable. And that's it. But I can tell everybody out there, if they're short-term trading, if you're not journaling your trades, you're doing yourself a great disservice, because how can you do something? It's your business, right? So how can you run a business if you don't keep inventory? If you don't know what's coming in and out of the door, you can't run a business. And it's the same thing with trading. I have to know my hit rate, and I have to know which trades are working better than others. Some trades work better than others. I look for 5 different trading setups, and this is for short-term trading. For longer-term trading, I only look for a couple of different setups. When I'm looking for a longer-term trade, I'm looking to hit one of my moving averages after moving a considerable distance and then getting a bounce from there. But for shorter-term trades, I have to know. I have to know what I'm doing. And by doing this, I'll find out which trades work better also. And I'll concentrate more on those. Maybe my trend trades work better than my regular moving average trades or my far from moving average trades. And then I'll kind of zone in on that. And that's how you get your hit rate even higher, by concentrating on the trades that work better for you. But for everyone out there, everything is math. This is math, guys and girls, when you're using technical analysis. It's math. That's all these lines and stuff we have on a chart are. It's math, right? Moving averages are just math. I try to be as robotic as I can when I'm trading, no matter what kind of trade I'm doing.
How did you get this discipline?
Yeah, I was just going to go into that a little more. You get this discipline by doing it, okay? The only way to become a good trader or get used to trading is to do it, right? That's why I also tell a lot of people who join us, can I do on a practice account when I start? And TradeZero has practice accounts. I highly recommend that if you're a beginning trader, okay? But I only recommend it to the point where you're comfortable with the software, okay? Where you're comfortable putting stop orders in and your limit orders and your profit targets and all that stuff. After that, there's no point in doing it, right? And a lot of people at the beginning, or even if they're not doing well, are scared. They're scared to trade, right? I've had a bad experience. I'm just afraid to push the button. Again, the easy way to get over that, start by trading 1 share, 2 shares, whatever it is, right? That's how you get over that initial fear, okay? And then you just got to, it's time. It's time. They say to become good at anything, what is it, 10,000 hours of practice? If you want to be a great pianist or a great guitarist, 10,000 hours of practice. I always tell everybody, especially if they're struggling with this or they're new to it or they want to try day trading, that it's a sprint, not a marathon. And be kind to yourself, all right? Don't beat yourself up if you don't understand things that are going on right away. It takes time, okay? It takes patience. It takes discipline. I've been making a living doing this for 35 years, guys and girls. I have people in my room that are making a living doing this. There's lots of people that are making a living day trading. I'll say this as far as that's concerned, okay? I would never tell anybody to quit a job to start to try day trading. That is a recipe for disaster. Don't do it. And I have people ask me all the time, Dave, I only have to make this amount, okay? It's all I have to make, and I can support myself and my family. This is hard enough to do without having the pressure of paying your bills. I don't recommend that to anybody, ever, ever, ever. This is something where you can add some income. This is something that's great in retirement. And this is something that if you're going to do full time, you got to make it your job, and you got to do all the work that's involved in that. And it is work. I'm sure you guys see these things on Twitter and on Facebook and on TikTok, whatever it is. Everybody's got a system. Everybody's got a plan. You don't have to know anything. Just follow what I do. It's nonsense. Okay. That is nonsense. It's work, and you got to put the time. That's the bottom line.
Would you recommend to traders like who is starting just as a beginner to just focus 3 tickers at the beginning and know everything about this company and know the price action by day? So is that a good way to kind of shape your strategy?
That is the best way to shape your strategy. Yes. You don't need to spread yourself out and look at 20 different things. Look, the SPY, okay, is the biggest indicator. It's the S&P 500, right? Let me go back to my 5-minute chart. The only problem I'll say with this is, okay, it's not really a problem. All right, here's the QQQ, the NASDAQ 100. If we're going to be trading the QQQs or the SPYs, keep in mind you have to have an account that allows you to do that, right? So you have to have a retail trading account with a minimum of $25,000 in it. Really, if you want to be able to trade these. Now, you can trade options with a cash account. You can absolutely do that, okay? But if I want to buy, 100 shares of the QQQs, that's $47,000 in buying power, right? So you have to be able to have that in the account. Spiders in the same thing. You want to buy 100 shares, it's $56,000 worth of buying power. Paris, do you know what kind of leverage margin? Are you guys 4-to-1 in margin
6
on
to
a
one
$25,000 account? Buying power.
6 to 1 is the margin.
Oh, beautiful.
Yeah, account minimums are different. For TradeZero International, our account minimums are less. For Canada and the States, different. So if anyone interested, I can pull up our website and have a look on the fees.
Yeah, bop that up there for people, please. That's important. Yeah. So you don't even need the 25,000 guys and girls, and you'll get margin to trade up to whatever the buying power allows in the account. Okay. So, I have $27,000 in an account. So I get 6 times buying power. That means I have $160,000 to trade with at any point during the day. Okay. It doesn't mean you're risking that. That's another misnomer. People think because you're using buying power or margin that you're risking all that money. No, you're only risking what you're doing on that trade, right? It just gives us the ability to do more shares. Okay. But getting back to your question, 100%. Concentrate on 1 or 2 stocks or indexes. Get used to the patterns. Get used to how much they fluctuate, meaning the ATR, how much they move on any given time. Get your levels up there, some kind of technical analysis, whatever you're going to use, right? I always share mine with everybody. I'll bop it up there. Again, exponential moving averages. This is what I use. Okay, everybody has different technical analysis. Nobody has the holy grail. That's what I use. And what I use them for, quite simply, guys and girls, is to find support and resistance. Because that is the basis for everything that we do. When I have a line on a chart and a stock hits it, it may be a time to make a trade. That is the easiest thing that I could tell you, right? So all these lines on my charts tell me where I might make a trade. Those are all my technical analyses. So, yeah, concentrate on 1, 2 things and don't stretch yourself out too far. 100%.